As OPEC ministers left the organization's headquarters, the sense of relief was clear. Saudi Arabia, as the largest producer in the group, had agreed to take the biggest hit to its output, trying to drive up the price of crude.
I think it's a good day for the oil markets. It's a good day for the industry. And in the overall scheme of things, it should be a good day for the global economy. I think it will be a boost to global economic growth.
With the agreement reached here on Wednesday, OPEC's hoping it can show that it's able to act as one to push up prices. It's also trying to restore some of the credibility that critics say it's lost over the last few months. The breakthrough came after hours of talks, with the sticking point being whether Iran and Iraq would agree to output cuts. Iran had resisted because it's trying to regain market share lost under international sanctions, while the Baghdad government wanted to guarantee current oil revenues to help it take the fight to ISIL in the north. In the end, Iran agreed to freeze output at around current levels, with Iraq set to cut its production. For its part, Saudi Arabia insisted there should be consensus before it committed to cuts of 500,000 barrels a day.
The Saudis justifiably saying, look, in 2008 we all agreed to cut. We cut, everybody else merely produced on, and we were left holding the baby. So they say, well, you know what, if we cut, we can't be the only ones feeling the pain.
With oil prices half what they were 2 years ago, the pain has been felt most keenly in OPEC countries like Nigeria and Venezuela. They stand to gain from this new deal, but it's dependent on non-members like Russia cutting their own production in the short term.
Many countries are prepared to cut, and the 600,000, we think it is even modest. Out of that, Russia will take 300,000 barrel a day of reduction.
So OPEC has its deal and the markets have their good news for now. How far prices can rise and for how long are questions for another day. NADIM, Al Jazeera, Vienna.